Thank you so much, Dipeshi, for your introductory remark. And we have got a great learned speaker with us. And sir, it's a pleasure. Welcome, a warm welcome with a loud round of applause from all of us to you in today's session. And we are really happy and obliged to have you. And it's been 5 years I'm running this platform, but got a chance to have a speaker like you for the first time. And I've been watching you, following you since long, and always wished as a professional to have you. And through Kulinji, we got this opportunity today. And on such a good day, 26th of November. So, sir, Dias is all yours. So please.
Anyways, now we'll speak into three portions. One would be the rights, the taxpayer rights in the Constitution, the rights which are given, enshrined to the taxpayers, and at the same time, we'll also deal in the second discussion part of the limb, that will be the duties and then the obligations of the taxpayer. It is not only the rights, it is not only the duties, but there are certain obligations which have to be fulfilled. And therefore, whenever we are looking forward for any statute, whenever we are looking forward for a provision, we look into from a very important perspective, which is right to equality. Wherein, when we discuss from the perspective of the taxation, we can very well say that equals cannot be treated unequals. And at the same time, unequals cannot be treated equals. So this is the right of equality, which is enshrined in Article 14 of the Constitution of India. But when it comes to right of equality, it is extremely broader term. It is not a restrictive term, meaning thereby that we have not only to see this Article 14 from the perspective of equality, but also from the perspective of arbitrariness, discrimination. Because if there is a provision which is arbitrary in nature, or if there is an action which is arbitrary in nature, if there is an action which is said to be unfair, then in that case, Article 14 gets hit. Even if there is no discrimination, but if the action is arbitrary, I am of the view that the right of equality gets hit and Article 14 gets into play. So therefore, it is very important for every taxpayer to be aware about Article 14 of the Constitution of India. I'll give certain examples. Now, when it comes to tax law, I'll be limiting my discussion only to the tax laws. When it comes to the tax law, we all must appreciate that the taxation must be fair. It has to be fair. An unfair tax cannot be levied, it cannot be collected. There is a different section, there is a different article for that. We'll go into that. But for the time being, what I mean to say that when it comes to Article 14, we have to make sure that the taxation or the tax law which we are talking about must be fair. It must be having a rationale. Irrational or a tax law or any law rather being irrational is not appreciated, is not permitted in the Constitution of India. Then, as we have already discussed, that it has to be free from arbitrariness. There should not be any kind of arbitrariness when it comes to the tax law. And what is arbitrariness? We'll discuss. Then it has to be, if there is any difference which is being created or discrimination is being done, it has to be an intelligible differentia. It cannot be an arbitrary differentia which is being created. For example, generally you will hear that Constitution allows class within class or classes. What the Constitution allows? So Constitution allows classes. You can create different classes of people, different classes of taxpayers, different classes of officers, but you cannot create a class within a class. For example, it is taxable and it is not taxable. These are the classes. But when we say it is taxable, and then within that we also create a class which says these are exempt. So in taxable classification, exemption cannot be there, meaning thereby a class within class is not permitted, but classes are permitted in the Constitution of India. So if we find that there is something or there is an event wherein a class within class is created, then we can very well argue on the arbitrariness and we can say that it is violative of Article 14 of the Constitution of India. I'll give certain examples how Article 14 can be applicable. One, the discriminatory GST rates without rationale can be struck down. If we have a discriminatory rates, wherein it says that I have come across certain discriminatory rates, we are arguing before the high courts. Say, for example, it says that if these services are provided by such organization, then the rate will be this. If the same services are being provided by Y organization, then the rate will be this. So to an extent, the class was provision of a particular service. Now class within class is if provided by X, then this rate, if provided by Y, then this rate. So this becomes discriminatory, this becomes arbitrary, and therefore it is violative of Article 14 of the Constitution of India. There are a lot of arbitrary actions which are being taken by the departmental officers or by the I'll say implementers of law. So therefore anything and everything which comes within the four corners of the arbitrariness can be very well challenged before the, I'll not say before the constitutional courts under Article 226, that is by virtue of a writ petition, but yes, I'll certainly say that if you are challenging a law, then it has to go before the constitutional bench or the constitutional court. But if you are challenging an arbitrary action, then it can be before the appellate authority. So I'm again repeating, if you are challenging a particular law, then the only remedy would be that go for a constitutional court, challenge before the High Courts or Supreme Court under Article 226 or 132 or 32 of the Constitution of India. Or else, if you are challenging an action, arbitrary action of an officer or the departmental executives, then in that case, you can very well challenge this before the appellate forums or the adjudication forums. So this is how Article 14 looks like. Some of the important judgments you can note down. One is KT Mupil Nair versus State of Kerala, 1961. It's an old judgment wherein a tax law was struck down being arbitrary. Now, recently, if you come across, if we talk about GST, then there is a judgment of Munjal Manish Bhatt by Honorable Gujarat High Court, wherein they have struck down or rather read down a provision of para 2 of 11 of 2017 notification, which says that one third of the deduction will be given against the value of land. So even if the value of land is determinable, it is determined separately, then also one third deduction will be given, is declared or is held to be arbitrary by the Honorable Gujarat High Court. So this is how Article 14 comes into play or help the taxpayers. So one judgment which I have just indicated was KT Mupil Nair versus State of Kerala 1961. The other one is AP Royappa versus State of Tamil Nadu in 1974. And then Vodafone, we all are aware that Vodafone International Holdings versus Union of India, which was adjudicated by the Apex Court, wherein the Apex Court has clearly said that the taxation cannot be unreasonable. It has to be within the four corners of the reasonableness. I'm not saying that the tax cannot be strict or stringent. The tax cannot create hardship. Yes, it can create hardship, that it will not become unconstitutional. But when it is unreasonable, that becomes or that get hits by Article 14 and therefore violative of the Constitution of India. Next, right, I'd say this was the first Article 14. I think somebody's mic is on. So क्या हो रहा है कि मेरा आवाज इको करके वापस आ रहा है. If somebody can just read. Yeah, now it is better. Second would be, second right which I would like to touch upon here would be जो हम almost in all writ petition we are mentioning that, which is right of business. Article 19(1), clause G, clause is small g of the Constitution of India. So Article 19 is a broad provision, broad article, and therefore I indicated that I am extremely happy that the topic was limited and restricted only to the taxpayers. So I'll say that right to carry on trade or business is Article 19(1)(g. That is another right of the taxpayer. So if there is a law which has been developed or which has been implemented in such a way that it is creating difficulties in carrying out the business, or if there is an action by the departmental officers or maybe by the adjudicating authority or any other authority who is bound to or he is liable for implementation of this law, if such situation arises and in those situations my right to business gets impacted, then I can very well approach the courts. I can very well challenge that particular action before the courts, saying that there is a violation of Article 19(1)(g) of the Constitution of India. Now please appreciate, since we are discussing on the Constitution of India and the taxpayer rights qua the Constitution of India, we will have to appreciate that every right which is given in various articles of Part 3 of the Constitution of India may not be applied for, may not be imposed upon when it comes to the appellate forum, because the appellate authority may not have that jurisdiction to decide on that. If we are saying 19(1)(g) is violated, and we are making these submissions before the appellate authority, maybe the appellate authority will not be able to appreciate these submissions, and therefore most of the times we'll have to go before the writ court. We'll have to challenge in the before the High Court in Article 226 of the Constitution of India, and we'll have to place on record that look, this is not permissible. This is impacting the trade or business. Just if I can take a pause for 1 minute, just give me 1 minute because High Court is concluding. I need to listen. Just give me 1 minute. I'm seeking permission, Kulin by just 1 minute. I'm extremely sorry. Just thank you, sir. I'm sorry. Yeah. Getting back to the point, I was on right to business. Now, when we talk about right to business, it's a very broad term. And therefore, I was submitting that we need to make an endeavor to clarify that our right to business is getting impacted before the adjudication or the appellate authority. But maybe they will not appreciate our submissions, or they do not have jurisdiction to decide on those particular issues, wherein the violation of principles of natural justice or violation of the Article 19(1)(g) is there. So the alternate would be that we approach the constitutional courts under Article 226 of the Constitution of India whenever there is a violation of either Article 14 or maybe Article 19(1)(g) of the Constitution of India, and therefore we can press before those forums, before the constitutional courts, that there is a blatant violation of these articles which are enshrined as a fundamental right of a taxpayer, or rather as a citizen of the country. And if not well taken by the adjudicating authority, I will recommend that the alternate remedy, that is the constitutional court, needs to be approached. So therefore, Article 19(1)(g), we all are aware, either any excessive or confiscatory rates, then also it violates Article 19. Overbroad search or seizure affecting business without justification. There are a lot of instances wherein the search goes on for days and days together. Specifically, when we talk about, with due respect to all the officers, when we talk about the state officers, they continue search. They do search. They will conclude the search at 6 p.m. They will again come tomorrow. Then they will continue with these kind of search activities for 10 days, 15 days at a stretch, which will not only hamper the mental status of the person, but which also hampers the entire business of that organization. So therefore, that is also fundamental violation of 19(1)(g) of the Constitution of India. And one very important judgment which can be noted here would be Pathuma, PHTU, PATHUMMA versus State of Kerala in 1978, wherein it was held by the apex court that taxation cannot be confiscatory. If taxation becomes confiscatory, or if unreasonable tax restrictions are levied, then in that case, Article 19(1)(g) or the right to business gets impacted, because you will not be able to conduct your business in the efficient manner because of the restrictions of the taxation, or because of the arbitrariness or the unreasonableness of the taxation, or the confiscatoriness of the taxation. So this was the second right. So one, Article 14, two, Article 19(1)(g) of the Constitution of India. Now we'll go to the third, which is Article 21, right to due process and the fair procedure. See, Article 21, we can say a right to speak also. We can say principles of natural justice. We can say right of audience. All these are enshrined in Article 21 of the Constitution of India, which says that there has to be a proper process which needs to be adopted for each and every action. All the searches, all the arrests, or the penalties must follow a just, fair, and a reasonable procedure. Meaning thereby, if a procedure which is laid down in law, or a procedure which is settled by the jurisprudence, for example, principles of natural justice, the opportunity of personal hearing not given, if that is violated, then you will have to invoke Article 21. You cannot invoke Article 14. You cannot invoke Article 19(1)(g) in such situations. You will have to invoke Article 21 of the Constitution of India. Meaning thereby, I'll give an example. For example, a GST officer issues a summons to you with no reasons. He issues a show cause notice to you with no reasons why the show cause notice is being issued. He will simply say, there is a difference between this form and this form, and therefore the show cause notice. Sir, that show cause notice is violative of Article 21, because the reasons are mandatory. It is the duty of the officer to discharge the liability of burden of proof. He will have to discharge that burden of proof liability, and if he fails to do that without issuing a detailed reasoned show cause notice, then that show cause notice is violative of Article 21, meaning thereby liable to be quashed and set aside by the courts. Or let's say another example can be, now there is a, on 17th August 2022, if I'm not wrong, the guidelines for arrest was issued. Now, if they do not follow those guidelines, or if they do not follow the procedure which is laid down in CRPC or maybe the section 69 of the law, then in that case, that action will also be treated as a violative action of Article 21, because the procedure which is set down in law, the procedure which is supposed to be followed, is not being followed. So that is one of the reasons why Article 21 is very important, because if hearing is to be given before adjudicating a matter, and if that hearing is not given, Article 21 directly gets hit, because the procedure of hearing is not followed, and therefore the Article 21 and the right of the taxpayer comes into play. I'll give two very important judgments. One is Maneka Gandhi versus Union of India. We all might have read this. I am extremely hopeful that many chartered accountants, many advocates are there in this forum who are attending the session. They would have certainly gone through, or they would have heard the name of this particular judgment, Maneka Gandhi versus Union of India, wherein it was clearly held that any law must be fair. A law which is unfair cannot sustain. So, very important article. So we have touched upon three important articles wherein the fundamental rights of the are the rights of the taxpayer. One Article 14, another one Article 19(1)(g), and the third one is Article 21. Now let us move to right against excessive penalties and double jeopardy. Again, very important Article 20. Sir, please go and refer Constitution of India, Article 20, Clause 2. It clearly says that a person cannot be penalized for an action twice. If I've conducted, or if I have entered into a mistake, if I have been a part of some offense, then I can be punished only once for that particular offense. I cannot be punished twice. So therefore, Article 20, which speaks about the rights of excessive penalties and double jeopardy, because you cannot be punished twice for the same offense. What they are doing is, I'll give an example from GST itself. Under section 122, they are issuing a notice, or they are issuing orders under saying 122(1) clause C, 122(1) clause 7, 122(1) clause 9, 122(1) clause 14. All these four sections, subsections, and clauses you have violated, and therefore there is a penalty of 100% for each. So if there is a liability of 1 lakh rupees, it will become 4 lakh rupees penalty. 1 lakh in 122(1)(3), 1 lakh in 122(1)(4), 1 lakh in 122(1)(7), 1 lakh in 122(1)(14), or whatsoever. So to be very honest, that is not permissible in law. That is absolutely violative of Article 14 of the Constitution of India. And at the same time, it is also violative of the provisions of law, because 122 does not perceive that. So Article 20 is next article, which is very important. One judgment can be noted, which I personally feel is important, which speaks about the double jeopardy, which is Shanti Prasad Jain versus Director of Enforcement, ED. Shanti Prasad Jain versus Director of Enforcement, 1962. It's an important judgment, so it has to be kept in mind. Now, next right would be right on property, or right to property, which is Article 300 capital A. See, originally in Part 3, which deals with the fundamental rights in the Constitution of India, 300A, or right to property, was not enshrined. It was not there. Over the period in time, it got developed, and therefore Article 300A was introduced, and it is now in the statute books in the Constitution, which says that a person, it is not a fundamental right, please bear in mind. 300A is not a fundamental right, but it is one of the right in the Constitution of India, and therefore I have incorporated. Reason being, right of getting the input tax credit and utilizing that input tax credit is a fundamental right, because it is a right of property. Input tax credit balance is your property. If there is a balance in electronic credit ledger, it is your property, which can be utilized for discharging the output tax liability by virtue of Section 49 of the Act. And therefore, Article 300 capital A is important for a taxpayer. He must be aware that If he has an asset, if he has a property, then that property is also his right, and therefore a taxpayer can never be deprived of any property. For example, bank accounts, his goods, his vehicles, unless it is by authority of law. So if the authority of law says that you cannot claim the input tax credit by 30th November of the next year, then it will lapse. So there you cannot say that the property is being, or the right of property is being violated. That is not permissible. But when it comes to that, once you have availed the input tax credit by 30th of November next year, then they cannot say that it will lapse. And the example is Shabnam Petrophils of our own court. Thankfully, I have argued that. So it clearly laid down a principle that our input tax credit is your vested right. Eicher Motors is one of the judgments. The Aichi Karkarya is the judgment, wherein the apex court has said that these are your fundamental vested rights and therefore it cannot be taken away, and it enshrines into Article 300 capital A of the Constitution of India. So this is another right, and the latest and the best example can be Radhakrishna Industries versus State of HP, 2021 apex court. Radhakrishna Industries versus State of Himachal Pradesh for looking into the beauty of Article 300 capital A. Also, you can look forward for Eicher Motors, Shabnam Petrophils, the Aichi Karkarya. All these judgments discuss about the input tax credit being a vested right, therefore becomes a property, and therefore covered under Article 300 capital A. So now these are certain rights which are enshrined in the Constitution of India for the taxpayer. I'll repeat once again Article 14, which discusses about the equality, discrimination, speaks about the arbitrariness, speaks about the unreasonableness. If that is being violated, Article 14 gets violated. Article 19(1)(g) of the Constitution of India, your right to conduct your business, your trade. If there is any hitch or any glitch or any problem, obstruction in that, then you can very well invoke Article 19(1)(g) as your right. Next is right to due process or the fair procedure, Article 21 of the Constitution of India, and then right of excessive penalties or double jeopardy, Article 20 of the Constitution of India, and last but not the least, which I would like to cover today because of the paucity of time, right to property, which is Article 300 capital A of the Constitution of India that we have discussed just now. Now moving to the obligations. See, it is not only about the right. If we have a right, then we also have a duty. We also have an obligation toward the state. We cannot only say कि ये तो हमारा right है, and therefore we'll exercise that rights, or we'll take the benefit or the liberty to exercise those rights or invoke those rights. At the same time, we are having certain obligations also to be complied with in the Constitution of India when we are a taxpayer. So therefore, which are those? First and foremost is Article 265. Everybody of us are aware what is Article 265. It simply says an obligation to pay the taxes which are applied or which are implemented in the Constitution of India, or as per the Constitution of India and in Indian laws. So obligation to discharge the tax liability is first and foremost obligation of a taxpayer. See, there are again I will say it's a right also, it's an obligation also. How right? Because a taxpayer cannot be levied a tax without authority of law. So that becomes a right that the implementer or the lawmakers must ensure that the tax, if they are demanding, must be within the authority of law. So if the implementers are there, if the government comes or the officer comes and he asks for the tax to be paid, he must comply with Article 265 of the Constitution of India that they are asking for tax within authority of law. This is a right of the taxpayer to ensure that the taxes are being demanded from him under Article 265 of the Constitution of India. But at the same time, it is also the obligation. It is also the obligation of the taxpayer to make sure that the taxes which are imposed on him by way of a valid law Under Article 2265 of the Constitution of India, it is an obligation that he must discharge that tax liability within the four corners of the law. If he does not do that, he is not fulfilling the obligations in the Constitution of India on a taxpayer. So therefore, taxpayer must pay tax only when there is a lawful levy. I have already said, if there is an unlawful levy or if there is a demand, let's say a transaction or a supply entered by you is exempt by way of an exemption notification, still the departmental officers comes forward and they are asking for a tax. So this is an unlawful demand of the tax, which you may not or you must not discharge. So there will not be a violative of or violation of Article 265. Reason being, it is an unlawful tax. But if the tax is lawful, see, needless to say, we all are aware what the taxpayer do, whether they them by way of a valid law, rightly or wrongly. We all are aware, so I'll not go into that. So therefore, one thing is very important: the rights have to be intermingled with the duties and the obligations. So therefore, the right is that there has to be a lawful levy of tax. At the same time, obligation is to discharge the lawful tax. This is the first point. The second point is another very important, I would say, which is deriving from which is being derived from Article 51 capital A of the Constitution of India, which are one of the fundamental duties and statutory obligations. Cooperate in the investigation of the department. Again, very important. Now, taxpayer will call a consultant and he will say, "Sir, there are certain officers sitting in my office. How to avoid that? मैं उनके सामने नहीं जाना चाहता हूँ. Please help me out." Sir, your fundamental duty is to cooperate in the investigation if any carried on against you. So therefore, Article 51 capital A becomes important. Responding to any summon that you have received under Section 70 is one of those examples that you are cooperating in the investigation. If there is a notice issue to you, if there is a search at your place, or if there is a detail which has been asked for, maybe under Section, let's say, 59, or under Section 65, which is audit, then all these sections which are asking for a certain document to be submitted to them must be submitted within the time or within the reach. If they are asking for something which is impossible to be submitted, or which is not available with you, then in that case, obviously, you will have to reply back to them saying that it is not possible for me to do it. But if it is possible, if it is within the reach, then it has to be there, and then only 51A gets complied with. And it's very very important to note that this is one of the most important duties, most important obligations of a taxpayer, that he must cooperate in any investigation which is taking place against him. And one very important and landmark judgment is DK Basu versus State of West Bengal. DK Basu versus State of West Bengal clearly says the procedural safeguards which are applying or which are applied during the search. So you have to take care of that, and it's a very landmark judgment which we celebrate and which we always discuss in our petitions also. Third obligation, I would say, is again very important: to comply with law. And when I say comply with law, what is the duty and the obligation given to a taxpayer under GST? I'll say to maintain the books of accounts. He must maintain the books of accounts and the records as per the requirement of the law. If GST law says that these are the documents which are supposed to be maintained, then he must maintain all those documents and the records in accordance with law. That is also an obligation of a taxpayer. See, you can generally, we all harp upon the rights that we have. And at the same time, we try to avoid and ignore the fundamental duties and obligations also that are linked with those rights. So this, if we have a right to question the officer against the summon that he has sent, or against a notice that he has sent, then we also have an obligation to maintain the books of accounts and the records which is required in the law. It is also our fundamental obligation, a fundamental duty, that we must maintain all those books of accounts which are required to be maintained in accordance with law. Next is, now when it comes to the obligations or the duties, we'll have to keep in mind one thing very clearly. If I have to talk about GST law or income tax law, then our utmost important obligation would be to file returns on time. If there are returns which are specified in that particular law of tax, today I'm talking only about the taxpayer, so therefore I'm restricting my discussion to GST, income tax, all those things. It's not about the citizen of the country. So therefore, the obligation which comes to a taxpayer, or the obligation which has to be fulfilled by a taxpayer, also includes the returns or the documents or the compliances which are supposed to be done by him from time to time basis, and on, or rather I would say, in accordance with law. So therefore, obligation is also to file returns, provide information to the summons, provide the documents that has been asked for, go for the statements if the summons are there. All those things are part and process of the obligations. And last but not the least is, one of the most important obligation I would say is not to misuse your rights. Generally, I have seen and I have observed that many of the taxpayers are aware about their rights, so they try to misuse those rights to a large extent. For example, Article 14. Any summon that is being issued, he will say it is violative of Article 14. It is arbitrary. Any order, if he will receive, he will say that the opportunity of hearing was not given. So therefore, it is violative of Article 21. Any search or any action will be conducted against him. Howsoever grave offense he has created, he will say it is violative of Article 19(1)(g) of the Constitution of India. It is impacting my right to business. Sir, this will not work. This will not work. These both are two hands. It must go hand in hand. If you have the right, you have the obligation. Meaning thereby that to run away from your obligation, you cannot take the shelter of right. Right is at one place and the obligation is at another place. Both are equally important. You must be aware of your right. I agree, and therefore I appreciate and I say that it is important to have the knowledge of whatever rights you have. But at the same time, you cannot take shelter or you cannot misuse those rights that you have not to comply with the law. You have to fulfill your obligations to the best extent possible. Then let the arbitrary action continue. You have to support all your documents. Let him say that it is taxable, it is not acceptable, blah blah blah, whatever he wants to say. No problem at all. But you must fulfill your obligations. I'm just trying to conclude this, that what are the obligations I'll try to touch upon. One, to discharge the correct tax liability at the right point in time in accordance with law, and that is Article 265. Then I have an obligation to cooperate in the investigations or any proceedings by the department, whether it is summon proceeding, whether it is audit, whether whatever proceedings are there, it is my obligation to support and to cooperate. Another obligation which is extremely important, which I have found missing in most of the cases, is maintaining proper records and documents which are required, and the books which are required as per the law. And then another obligation is to file all the relevant informations which are being asked for, or the compliances to be made, or the returns to be filed. And last but not the least, that rights given in the or enshrined in the Constitution of India or in the law should not be misused. It should not be misused by any chance or by any possibility. Now let us touch upon some, or I'll say some extra duties that I'll try to touch upon, which are again as per me are of some importance, and then we'll conclude this session. One is 51A. I've already discussed about rule article 51 capital A. Now I am discussing some of the sub articles of that. So 51A clause A. It talks about the payment of taxes honestly. This is your fundamental duty to the Constitution of India. It is the fundamental duty. We have talked about the part 3, which is fundamental rights, Article 14, 19(1)(g), 20, 21, 300A, all those things we have talked upon. Duties are also there, which are enshrined in Article 51, is that you have to pay taxes honestly. So therefore, respect the Constitution and respect the laws which are applicable to you. Don't try to play with the law for the benefit of your own self. Second, uphold the integrity of the country. So therefore, avoid PMLA, avoid the black money, avoid hawala transactions. These are fundamental duties. You cannot indulge into black money. You cannot indulge into hawala or fake ITC transactions. So that is something which is enshrined in law as a duty of a taxpayer, or rather to keep it broader, duty of not only a taxpayer but also the citizen of this country, that he also needs to make sure that there is no capital. See, recently the Bombay High Court, recently Honorable Apex Court in Arvind Kejriwal, in loud words have said that these activities of economic offenses wherein the tax evasion and everything takes place are much more grave than the criminal offenses of rape, murder, etc., because these are hitting the economy very badly, and because of this the entire progress of the country stops. So that is how it has been dealt with by the Honorable Apex Court and by various high courts. Therefore, any hawala transactions, fake ITC transactions, or the black money transactions must be avoided. That is your duty. Third is, we have to promote the harmony amongst the taxpayers, amongst the businesses, and amongst the countrymen. So therefore, we have to avoid the fraudulent invoices or all those instances that is being going upon. And then we also are duty bound to support the environment, and therefore we need to protect the environment wherein the tax benefits are also given. For example, if you go to X place, then certain benefits are given to you, provided you open up a factory there. So all those things are also you are duty bound, that you need to promote all those environmental things which protect and preserve the environment of the country. Another very important duty, I would say, please safeguard the public property. It's a duty of a taxpayer also, because any public property is out of your own taxes that you have paid, and therefore any damage to that will hit your pocket again. So therefore, it is a duty that you do not destroy, you do not become a cause of that, or you do not appreciate the destruction of any government offices or the records of tax officers. I have observed, I have seen that there are certain taxpayers, certain professionals who take the pride कि मैंने तो फाइल गायब करा दी. See, that will not help you. That will not help the taxpayer. And why on what basis you are helping such a taxpayer for penny rupees or some thousands or lakhs of rupees, that he runs away with the economic offense? So therefore, protection of the public property is also one of our duties. And last but not the least, which we have already discussed, that we need to maintain the accurate bookkeeping, accurate accounting, and we need to comply with the audits which are specified in the law and the compliances thereof. These are very, very important. And one very important judgment, I'll say, that fundamental duties which are discussed and deliberated upon is AIMS Students Union versus AIMS. There, the fundamental duties of a student and for the doctors and others are discussed in detail. So therefore, that needs to be looked into. So let us try to summarize the discussion that we have done up till now. One, when we were discussing about the taxpayer rights, so we discussed about Article 14, Article 21, Article 19(1)(g), Article 20, and Article 32 and Article 226. So I've already discussed while discussing the provisions and the Article 14 that if you do not find a way and if you are held remediless in any law, then you have an option to approach the Constitutional Court under Article 226, the High Court of the jurisdiction, or you can approach the Supreme Court under Article 32. So therefore, these are also your fundamental rights. To approach the Constitutional Court under Article 32 or 226 is a fundamental right of a taxpayer, not only the taxpayer, but also the citizen of the country. And also the taxpayer right is Article 265. But at the same time, Article 265 also imposes an obligation on the taxpayer that may and he must discharge the lawfully imposed tax on him. So Article 265 is two-way sword. If you consider it to be a right, you also need to consider it as an obligation. So therefore, both are mandatory. Proceedings or the investigations, you need to file your returns, maintain your books of accounts properly. You have to appear before the authorities when the summon is being issued, and the correct information needs to be prepared and submitted to the officers. And then when we have discussed about the duties, we have discussed multiple duties, but the most important would be compliances of the law. The honest compliance of a law is important. To not to evade tax or to claim fake ITC, you need to I'll say avoid, rather you have to refrain from entering into any such kind of or indulging into any such kind of advices or the actions. And last but not the least, you are also duty bound. A taxpayer is also duty bound to maintain the public property, and at the same time to contribute to the economic integrity. Because if there is a tax evasion going on, and if you are a party, if by any chance we knowingly or unknowingly, if we are party to that particular economic offense, then certainly it is going to hit the economy, and gradually it is going to hit the entire country. So, friends, this was all about the some of the rights, some of the fundamental duties, and I'll say majorly we have covered into the obligations of a taxpayer, which he must keep in mind before venturing into any transaction which is liable to tax, or before venturing into any business. He must be aware that what kind of tax liabilities can be imposed on him, and whether he is going to perform properly the business, and at the same time whether he is going to perform the duties of a honest taxpayer. With this, I am once again thankful to uh, uh, Surat Commercial IT Bar Association and the GyaanStation. I'm extremely thankful to SGI, TBA, and ITBA, along with GyaanStation, for giving me this wonderful opportunity on a wonderful day of the Constitution. Thank
Thank
you. Thank you very much. And I'm extremely sorry that I had to take a break in the between the deliberation, because one of the matters which is very important. Tomorrow, all those practicing in GST will come to know within a day or two, like, because tomorrow again we will be arguing at 4 p.m. before the Gujarat High Court, and thereafter, day after tomorrow, the Honorable Attorney General is going to argue. Thereafter, Advocate General is going to argue. So thereafter, we'll come to know, and we'll find a very important judgment on Section 129 and 130 of the CGST Act. Thank you very much.
Thank you so much, sir, and for this wonderful presentation and on Constitution. And no one can speak as a chartered accountant. You are working in the capacity, you are a CA, you are a doctor, you are a lawyer, and you have elaborated today's session so well on Constitution in such a short span of time. And instead of already being there present in hearing also, so thank you so much, sir, for your time, and we are really obliged. And on behalf of all the participants and the panelists present here and all the organizations, I thank you for being here with us. So, looking forward for more sessions. Especially, we would like to hear GST from your side in the next
Manoj.
time. Yes, sir.
Thank you so much. Thank you.
Thank you, sir. And now we have with us our next speaker, very eminent, an author of Taxman books, CA Dr. Shailendra G. Saxena. Sir, welcome you in the second part of our session in which we are going to speak on GST. And for this, I request Dipesh Ji to please introduce our next speaker. Over to you, Dipesh Ji.
Good evening. It is a great pleasure for me to introduce eminent speaker, Dr. C.A. Shailendra Saxena, sir. He is going to talk about GST annual returns and reconciliations. His education qualifications are PhD in Financial Management, Chartered Accountant, Cost Accountant, Company Secretary, and Certified Fraud Examiner from ACFE USA. Guest faculty in National Academy of Customs, Indirect Taxes and Narcotics at Vadodara and Mumbai. He has nominated various institutional as a member of GST and Indirect Tax Committee of WIRC of ICAI for the year 2024-25. Co-chairman of GST Committee of SGCCI, co-chairman of South Southern Zone of AGFTC, past chairman of South Gujarat chapter of WIRC of Institute of Cost Accounts of India, past chairman of Bharuch branch of WIRC of Institute of Chartered Accountant of India. He has delivered, lectured at more than 150 seminars on GSTs and indirect taxes organized by various institutions. Co-author of book GST Annual Return and Reconciliation published by Taxman. With this word, I introduce before you today's eminent speaker, Dr. Shailendra Saxena, sir. Sir, welcome.
Thank you, Dipesh bhai, for nice introduction. Screen is visible?
Yes, sir.
Yes. So first, I thanks to the organizer who given me an opportunity for the topic GST Annual Return and Reconciliation. After Virat Kohli, that is the CA advocate Dr. Avinash Poddar, it is very difficult for the another batsman to bat on the same pitch.
Sir, today Avinash sir spoke on the constitution, not on
Yes,
GST. So you have got a
he,
plain ground for yourself
he is my
to hit
very
your
good friend.
sixes and fours.
He is my very good friend, and we have also a speaker in various seminar. So, coming to the topic, basically, topic is the GST Annual Return and Reconciliation. This is my book, 8th edition, published by the Taxman 10 days before. So, this is the objective book for analysis point of view, commentary point of view, how to prepare the annual return and reconciliation. And once again, I thanks the organizer for inviting me for this seminar. First, we start what is the applicability of GSTR 9 and 9C. GSTR 9 is basically annual return. Annual return is nothing but it is a compilation and aggregation of GSTR 3B, which is the monthly return, memorandum returns. So all the data of GSTR 3B, if we aggregate these data, so it's become in the auto-populated manner in GSTR 9. And GSTR 9C is the reconciliation statement between the annual return and your books of accounts. So what will be basically, these are the differences between the books and between the returns. In the reconciliation statement, these are the highlighted, and you have to given the particular reason. So what is the nature of difference and why these difference are arises. So applicability point of view, if we see the GSTR 9 and 9C, GSTR 9 is applicable for those taxpayer whose aggregate turnover is the 2 crores rupees. So here the aggregate turnover means pan-India basis, your pan basis turnover, not for particular GSTN turnover. And for GSTR 9C, if your aggregate turnover is exceeding 5 crore rupees, so you have to file the GSTR 9C reconciliation statement in self-certification manner. Coming to the due date for current financial year 2024-25, the last date will be the 31st December for financial year 2024 and 25. We just cover some legal issues arises from the filing GSTR 9 and 9C, because more than 8 years has been passed for introduction of GST. Now, already department taken a basis, these GSTR 9 and 9C, for issuing the ASMT 10, DRC 01, that is the show cause notice, ASMT 10 is the scrutiny of return, DRC 01, that is the show cause notice. So we first understand the technicality, then we come into the form part. What will be the changes proposed for the financial year 2024-25? So we take a first issue: is revision of GSTR 9 is possible or not? Answer is no. Once you file the GSTR 9 or 9C, you cannot revise the form. Correction is permissible. What happens if you file the GSTR 1 and GSTR 3B? That return also, the correction is not, revision is not possible, but you can correct the data in the subsequent month returns of GSTR 1 and GSTR 3B. If we refer the circular 26/26 2017 dated 29/12/2017, we will just find that the correction is the possible in the subsequent filing return. If we see the Supreme Court case, in case of Bharti Airtel, although this decision is against the SSC, but their remarks are very, very precious for us for taking the ground or taking while preparing the reply of the any notices, scrutiny of returns and show cause notices. The comment of Supreme Court is form GSTR 3B would be considered as a return for the all purposes. So what Supreme Court told ki for the section 39, GSTR 3B is the final return. If we refer the circular 29th December 2070, it's not a contrary to 39.9, which provide for the correction when error or omission are noticed. Law allow the rectify omission incorrect particular when noticed. That's according to section 39.9. And SSC cannot be permitted for unilateral rectification, as change in the return would affect obligation and liability to the other stakeholder. And it is very important for the registered person and professional, be careful for filing these returns. Another issue is the time limit for issuing the notice and order. We must understand this timeline. This table shows from financial year 17-18 to financial year 23-24. If you see the right hand side, section 74, second last column from the right hand side, for 17-18 date already gone, 5/8/2024. 18-19 date already gone for issuing the show cause notice, that is 30th June 2025. For 19-20 date already gone for 30th September 2025, meaning thereby department cannot issue US show cause notice under section 73 or 74 for financial year 17-18 to 19-20. Now current year is the 2000. If we see that financial year 2020-21, the date is still pending for 73, that is the 28th February 2025, and for 74 issuing the notice date is the 28th August 2026. So in 73, there is a time gap between the 6 months for issuing the notice and concluding the order. And for 74, for 73, it is the 3 month, and for 74, it is the 6 month. Coming to the current financial year 2024-25, in this year, basically, section 73 and 74 is merged into the section 74A, and these applicable for the financial year 24-25 instead of section 73-74. And now a single timeline is provided for fraud and non-fraud cases, unlike a proceeding for the financial year. For financial year 24-25, notice likely to be issued on 30th June 2029, and order have to be passed by the 30th December 2029. So these are the basically changes for the financial year 2024 and 25. Another issue is the what documents required for preparing GSTR 9. We must understand what is the document which we kept in mind before preparing the GSTR 9, that is the annual return. If you see the portal, these are the basically window. If you log in your GSTR, you find the filing GSTR 9 and GSTR 9C, that kind of window. So from the portal, if you see the document required for preparing GSTR 9, that is the download GSTR 9 system. This is the compilation or this is the consolidation GSTR 9. So what document is required or what document we ask to SSC? That is the consolidated GSTR 1. We have to download from the GSTN, consolidated summary of GSTR 3B and table 8 document details, and one new table inserted in this time, download table 12 of GSTR 1 or GSTR 1A, that's called a HSN detail. After downloading this HSN detail, these HSN summary, we have to reconcile with our books of accounts. So this is the very, very beautiful utility, first time introduced. If you download that table 12, you will find the HSN-wise summary consolidated. You have to reconcile this summary with your books of accounts. Apart from that details, you need a audited financial statement, unaudited financial statement, trial balance. Why unaudited financial statement? Sometime upon the correction made in the audited financial statement, but they have not passed the entries in the unaudited financial statement. So you have to see the trial balance level to unaudited accounts, and that should be the tally, and that become, and because we need a signing document or basically balance sheet and profit and loss account and cash flow while filing the GSTR 9C. Coming to another issue, GSTR 4. This now onward, these are the legal issue we are facing during the scrutiny of return, during the show cause notice, adjudication of show cause notice. So first issue is the whether GSTR 9 can be considered the final return for the wrong filing of GSTR 1. So this is the situation कि अगर आपने GSTR 1 फाइल कर दिया by making mistake, either your outward supply is overstated or your outward supply is understated. So question is whether GSTR 9 is the final return considered by the assessing officer. This reply given by in the case of Agnes Exim Private Limited versus Assistant Commissioner 2024 Tax Scan High Court 1900. In this case, the Calcutta High Court single member bench observed that the authority appreciated the rectified error by filing GSTR 9. The benefit of such rectification ought to have been extended to the petitioner. And it was found that in this particular case, what happened? Export invoices value 1.7 crore wrongfully filed in GSTR 1 as a export with payment of tax instead of export without payment of tax, that is the under LUT. So court held that the benefit of such rectification ought to have been extended to the petitioner. So Honorable Calcutta High Court single member bench held that you have to consider the GSTR 9 as a final return. Whatever omission or error made while filing the GSTR 1 and GSTR 3B should be earned if SSC file the GSTR 9. That is the final return. Another issue is whether error corrected in GSTR 9, which was revenue neutral nature, can be considered by the assessing officer or not. Answer given in the case of Ambika Trading Company versus Assistant Commissioner of State Tax, Tala Charge and others, 2024 Tax Scan, Calcutta High Court, 1199. In this particular case, SSC filed the GSTR 3B return for the period of October 17 to March 18, which did not including the both input and output cess. SSC filed the GSTR 1 for the month of October 17, which does not include cess, but filed GSTR 1 for November 17 to March 18, in which they included the cess. While filing GSTR 9, they have corrected the error by showing the exact amount of compensation tax both for input as well as output in table 4A of GSTR 9. In this case, particularly, the Calcutta High Court held that if the GSTR 9, which was filed within the time, is not considered, the SSC right would be greatly prejudiced and matter remanded for the reconsideration. So court held that matter remanded to the original assessing officer for reconsideration of GSTR 9. Another issue is whether order passed without considering annual return in GSTR 9 and auditor statement filed GSTR 9C is valid under the GST. In this particular case, what happened? The petitioner had a 3 business vertical, and we have faced this problem in particularly Telangana and Tamil Nadu very frequently. In this case, petitioner had 3 business vertical in the same PAN number, but authority passed the order without considering the GSTR 9. Matlab, what happened? They consider the financial statement outward supply for particular one registration number. And in this case, Madras High Court held that the impugned order was to be set aside. The order was also passed without serving physical notice. One of the severe problem in this judgment also, that the notice issued by the assessing officer, they have not served the physical copy of that notice as required under section 169(1)(b) of the CGST Act. We see this section in the next slide. So, impugned order set aside by the Madras High Court and says that without considering the annual return GSTR 9 and 9C, you cannot assess the SSC based on the data of the GSTR 1 or GSTR 3B. This is basically section 169(1). We need to understand what is the mode of service. I have a detailed discussion at Alibag seminar with Advocate Avinash Poddar on this particular section. You must understand what is the sequence. 169(1) say this is the validity of service of show cause notice. If you see the service of show cause notice in under section 107 for appeal, some slightly different. So 69(1) say any decision, order, summon, notice or other communication in this act or rules made thereunder shall be served by the one of the following method. By giving the tendering it directly the messenger including a courier, by registered post or speed post or courier with acknowledgement due, by sending a communication to his email address, by making available on the common portal, by publication in the newspaper. If none of modes affairs said the practicable, by affixing in the some conspicuous place at last known place of business or residence of SSC or taxpayer. If such mode is not practicable, affix a copy thereof of the notice board of the office of the concerned officer or authority who or which passed such decision or order or issued such summon or notice. So moot question here arises whether this section we read sequentially or officer is entitled to jump or opt any of the method. So myself and Avinash Bhai is in the view it should be read sequentially, because otherwise officer affix the notice in his notice board, that is the last mode. If such mode is not practicable, affix a copy on the notice board of the office of the concerned officer. So that means instead of serving any of the mode of above this last point, officer affix this notice in his board and say the compliance of the section 169(1) is already done. So it's not a correct view. We see the one court ruling in this case, the Udayaraj Yadav petitioner Janit Creative Service versus Sale Tax Officer, writ petition number 7436/2024, dated 22nd May 2024. The petitioner argued that it received the notice as it was merely uploaded on the portal under the additional notice tab and not the view notices and ऑर्डर टैब, यानी जो ओरिजिनल नोटिस का जो टैब है उसमें वहां नहीं सर्व करके एडिशनल नोटिस के टैब में गया. इट कुड नॉट रेस्पॉन्ड टू द शो कॉज नोटिस. सो दैट्स द रीजन एसएससी इज नॉट filing his reply. So given the impugned order 4/12/2023 is set aside by the court. So here in nutshell, we can say that the effective service of notices should be there, and we see the various judgment in this court highlighted that you put your all the notices in the original notice tab instead of the additional notices tab. Issue number 7, Table 8A of GSTR 9 versus GSTR 2B reconciliation and its significance for availing ITC under GST law. What happened? We various notices and majority of notices based on the table 8. First, we understand what is the legal significance of table 8. If we see the key points consideration for reconciliation differences causing due to the GSTR 2A or 2B. If we see the GSTR 3B, for reversal, there is a two kind of reversal. One is the permanent reversal for the block credit, that is the 17.5. Another is the temporary reversal. So why temporary reversal arises? Due to this 4 point or 5 point of section 16 subsection 2. First, we understand what is the point number 1. The taxpayer have a possession of tax invoice, debit note issued by the supplier, number 1. Number 2, he has received the goods and services both. Number 3, the tax charge in respect of supply actually paid the government by the supplier. But the first, the recipient paid the tax along with value of goods and services to the supplier, and supplier discharged the tax liability to the government. And fourth is he has furnished the return under section 39. That means recipient must furnish his return GSTR 3B and avail the input tax credit. One new point added in this section with effect from 1st January 2022, that is the 16(2)AA. So the details of invoice or debit note referred in clause A has been furnished by the supplier on a statement of outward supply. The details have been communicated to the recipient on such invoice or debit note in manner specified under section 37. So section 37 is pertaining to GSTR 1. So your supplier must file the GSTR 1 and that auto-populated supply must be reflected in your GSTR 2B. After reflecting this inward supply in GSTR 2B, you are entitled to take the input tax credit. Now I come to these are the reason for the temporary reversal. If any of these 5 conditions is breached, your ITC must be reversed in the temporary reversal. And whenever these conditions fulfill, you re-avail the credit for temporary reversal. Now coming to the legal significance of table 8. Majority of notice issued by the department based on the table 8. If we see the departmental clarification, which says the GSTR, the table 8 is not a legal validity. This is only for the purpose of facilitation of taxpayer by using the department for settling the revenue sharing or GST sharing between the state and central. First, we see the press release dated 3rd July 2019. This says the premise of table 8D of annual return. There appear to be some confusion regarding the declaration of input tax credit in table 8 of the annual return. The input tax credit which is declared computed in table 8D is credit that was available to the taxpayer in form GSTR 2A, but was not availed by him between the July 17 to March 19. The deadline already passed and the taxpayer cannot avail such credit now. There is no question of lapsing such credit, and since the credit never entered in the electronic credit ledger of any taxpayer, you see the last comment. Therefore, taxpayer need not concern about the values reflected in this table. This is merely information that government needs for the settlement purposes between the central and state. So the significance of table 8 is for the settlement purpose. Another press release, if we refer the dated 18th October 2018, what is the comment in this press release? Further, GSTR 2 is the dynamic statement and the government is aware that there have been sufficient technical glitches on the portal resulting in loss to the taxpayer. And it is clarified that furnishing detail in GSTR 1 by the supplier and the facility to view the same in GSTR 2 is like taxpayer facilitation and does not impact the recipient right to avail ITC based on the self-assessment. So it's a table 8 is the only for taxpayer facilitation, not used for issuing the scrutiny notices or show cause notices. We see whenever we compare the ITC or we reconcile the ITC, we must examine what is the ITC we availed in the GSTR 1, what is ITC reflected in GSTR 2B, what is ITC reflected in 8A of GSTR 9. Whenever we receive any notices for excess availment of ITC in GSTR 3B in comparison of GSTR 2B, first, we refer the instruction 2/2023-GST dated 26 May 2023. In this instruction, CBIC instruct the officer, the proper officer shall therefore rely upon the latest available data of GSTR 2B. So these are the two recent advisory of GSTN. So therefore, if you receive any notices for excess claim of ITC in GSTR 3B versus GSTR 2B, you must download the latest position of 2B as on date, and considering that current table, you must prepare your reply for defend yourself. Another important thing, what happened in the notices, they mentioned that your supplier is not traceable, your supplier registration cancelled retrospectively. Therefore, these ITC is not valid ITC, which you availed in the GSTR 9, GSTR 3B and GSTR 9. So, counter that department contention, we must incorporate this thing in our reply. First, you refer the minutes of meeting of 27th meeting, for which minutes circulated in 20th GST Council meeting dated 21st July 2018, in which they refer that first you catch the supplier. In case of supplier is not traceable or supplier is insolvent, then you come to the buyer for recovery of the wrongful availment of ITC. Same view affirmed by the Suncraft Energy, Calcutta High Court. You first go to the buyer, you first initiate inquiry for the supplier, to the supplier, instead of directly come to the buyer. Although this department filed the SLP against this Suncraft Energy Calcutta High Court judgment before the Honorable Supreme Court, but due to monetary limit, because the stake is less than 20 lakh rupees, so Supreme Court not entertained this particularly SLP and dismissed on the monetary ground. So therefore, the argument on the merits was not held before the Supreme Court. Another judgment is the TY Beethel Enterprises versus State Tax Officer of Investing Wing. Same proposition held in this judgment. Another judgment of the Kerala High Court in the Diya Agency versus State Tax Officer, TMI 955, Kerala High Court, same proposition affirmed. Last but not least, you must understand these, as I told earlier, the case Union of India versus Bharti Airtel, Supreme Court. In this judgment, the comment of Supreme Court is very, very crucial. In this judgment, Supreme Court held that who told you to see the GSTR 2A for the period of 17-18? Because if you refer the rule 36.4, that's in 36.4, they prescribe the certain bands you are entitled for 120% of whatever the ITC reflected in your GSTR 2A, 120, then 110, then 105, and from 1st January 2022, whatever reflected in GSTR 2B is eligible ITC for claiming these ITC from in your GSTR 3B. So in Bharti Airtel, if we refer the rule 36.4, which is the challenge more than 15 High Court as on date, and this rule is basically tiger without teeth because there is no backing of section prior to 1st January 2022. The section inserted in the 1st January 2022, the ITC must be reflected in GSTR 2B. So while arguing prior to period of 1st January 2022, you always take a stand that rule 36.4 is not a legal backing. Another very important issue, proper reconciliation for outward supply and inward supply. We will see the tables, how the reconciliation prepared in correct manner. Because what happened, officer issues the show cause notice based on the GSTR 3B and GSTR 2B. In both returns, there is a overlapping of data. The previous year data also reflected. They have not added the ITC pertaining to, for example, 24-25, but ITC availed by the SSC in 25-26. So we must understand how the reconciliation statement is prepared. So first, for outward supply, your data should be aligned. Your data should align in the clear manner. The data of outward supply reflected in GSTR 1 versus GSTR 3B versus e-invoice data versus e-way bill data versus books. Books mean whatever software you are using, Tally or SAP. So all the data must align. If these reconciliation, if you're supposed to prepare on the monthly basis, you never receive any notices. I will show you various companies or various corporates follow the practice for preparing these data on the monthly basis, invoice line item wise. I will show you the format. Another reconciliation for inward supply. So ITC claimed in GSTR 3B versus GSTR 2A or GSTR 2B. We will see in the next slide what is the correct format for preparing these reconciliation statement to know whether the registered taxpayer availed excess ITC in GSTR 3B in comparison of GSTR 2B or not. This is the basically precaution. This is the remedy for not receiving any show cause notice towards the outward supply if you follow the invoice-wise reconciliation on monthly basis. You see the format, left-hand side, the month invoice number, e-way bill number, invoice number, assessable value, then data as per GSTR 1. These data we prepare the invoice-wise. As per SAP Tally data, as per e-way bill, and as per e-invoice. If these data is aligned and there is no difference, only difference arises for e-way bill because below the 50,000 or 1 lakh rupees where the GST e-way bill is not required to prepare. This is the basically difference which you can just adding in the line in last line for the Tally purpose. So these are basically this format is very, very correct format and you need to prepare on the monthly basis invoice wise. So thereafter, you will be in position to say that you will be a minimum chance of receiving any scrutiny of return notice towards the outward supply. Coming to the reconciliation for inward supply. First, we cover the GSTR 3B reconciliation. Period is financial year 24-25. First, if you see the statement of determination GSTR 3B, first we prepare the reconciliation for 3B only, not 2B. 2B we see in the next slide. First, input tax credit as per GSTR 3B according to circular 170 or IMS, whatever the matching, the data auto-populated here. You must eliminate this basically transaction less ITC paid under RCM and availed the input tax credit in GSTR 3B because as we see, whatever supply made by your supplier under section 37, that means your supplier filing GSTR 1 and that GSTR 1 supply becomes your inward supply. Only matching will be done for that supply. You have to eliminate the RCM supply. You have to eliminate the ITC availed in the ISD inward supply. And one more overlapping transaction here, input tax credit of April 23 to March 24, taken in GSTR 3B in the month of April 24 to 30th November 24. These data we need to eliminate from this table and add the ITC pertaining to 24-25, which we claimed for the period April 25 to November 25. These data we have to add. So whatever ITC you have claimed for that particular financial year 24-25 is reflected here. Similar reconciliation we prepared for the GSTR 2B. Total input tax credit reflected in GSTR 2B as on March 25. We eliminate the data less ineligible ITC under section 17.5, that is the block credit, ITC availed on the import of goods, and input tax credit of April 23 to March 24 reflected in 2B for the April 24 to November 24. We have eliminated here and add the next year ITC input of April 24 to March 24 reflected in 3B for the month of the April 25 to November 25. This is the total inward supply as per 2B for financial year 24-25. Compare these data with the GSTR 3B return and you find the exact real difference. Whenever we put the notices data in this format, we find the SSAs not claim any excess ITC. So you just compare the data and just your data of notices, you just feed in this format, you will find the better position. Your demand will be reduced drastically, or there is a no demand because you have not availed any excess ITC. Due to overlapping of transaction, assessing officer issuing you either scrutiny of return notices or show cause notices. Issue number 9 here, whether ITC will be available when ITC is not claimed in GSTR 3B but reflected in 2A and claimed in GSTR 9. Here the situation is, registered taxpayer not availed any single ITC in GSTR 3B return. But these ITC reflected in GSTR 2A and SSC claim first time entire ITC for financial year, particular financial year in GSTR 9. Answer is yes. In case of Sanmuga Hardware Electric versus State Tax Officer, writ petition number 3804, 3808 and 3813 of 2024 dated 20th February 2024, the court, as I discussed, GSTR filed with the nil ITC, but while filing the GSTR 9, SSC claimed the ITC and refusing the claim by the department, the impugned order were issued the rejecting the entire ITC. The ITC claim was denied by the department only because the registered taxpayer did not avail ITC in the GSTR 3B return. So the contention of assessing officer was that since SSC is not claiming any ITC, the return prescribed under section 39 and availed the entire ITC in the GSTR 9, that is not a correct proposition according to assessing officer. But single member bench of Madras High Court noted, when registered person assert that he is eligible for ITCing by referring the GSTR 2 and GSTR 9 return, the assessing officer should examine whether the ITC is valid by examining all relevant documents, including by calling upon the registered person to provide such documents. In this case, the claim was rejected entirely because the GSTR 3B return did not reflect the ITC claim. Therefore, interference is warranted with the order impugned herein. The order are quashed and cases are remanded to the reconsideration. The appellant is allowed to hold all documents related to input tax credit claim before the assessing officer for maximum duration of 2 weeks from the receipt date of the copy of this order. So court, instead the SSC, you produce all your valid ITC claim documents before the assessing officer for verification. And if it is find okay, so you are very well entitled to claim the ITC because you have shown entire ITC in your GSTR 9, that is the annual return. Another issues come for the intrastate supply declared in the interstate supply or vice versa in GSTR 3B or GSTR 9. The matter came before the Kerala High Court in the case of S. Saji versus Commissioner of CGST 2018 TMI 954 Kerala High Court. If we see the particular section, if you see the section itself permitted, section 77 itself permitted, whatever you paid wrongly, you file a refund claim, and whatever correct, suppose you paid wrongly IGST, and you are supposed to pay the CGST and SGST, you pay the CGST, SGST and file the refund claim for the IGST. And in this section 77 clearly mentioned that you are need not required to pay any interest on such late payment because you have not a mala fide intention. But due to inadvertent error or by misunderstanding or some confusion, you have paid the wrong head. Circular 162 18/2021 confirmed this procedure, and notification number 35/2021 sub rule 1A of 89 of CGST rule read as follow: any person claiming refund under section 77 for any tax paid by him in respect of transaction considering by him as an intrastate supply, which subsequently held to be the interstate supply, may, before expiry of period of 2 years from the date of payment of such tax on interstate supply, file an application electronic in RFD 01 and claim the refund. Another issue is in GSTR 3B or GSTR 9, the input tax credit is taken as CGST, SGST instead of IGST. Here a reverse situation. In previous slide, that is the case of outward supply. Here the case of inward supply, wrongly claimed the ITC. Correct ITC is the IGST, but SSC wrongly availed in the CGST or SGST. So court answer the question of SSC. The Calcutta High Court in case of Cozen Limited versus Assistant Commissioner 2024-5 TMI 1316 Calcutta High Court held that there is no requirement for reverse the IGST credit when the SSC had availed IGST and subsequently used same for the payment of CGST or SGST on utilization of IGST for the payment of the CGST. So court held that there is no need for reverse the ITC. Another issue is the ITC availed in GSTR 3B, GSTR 9, but supplier have not made the payment to GST to the government. So you have cast your duty, you have paid the value of goods or services along with the GST to the supplier, but supplier did not pay the GST or remit these GST to the government. It's a basically very, very practical difficulty because you are not in position to verify how you can verify the data of your supplier. And there is no mechanism. If you see the GSTR 2A, there is one column whether the supplier has filed 3B or not. But if supplier filed the nil GSTR 1 for particular my transaction and file the GSTR 3B nil as a for my transaction, there is no mechanism to check the line-wise line item. What happened when we received the notice? We came to know that he has filed entire his GSTR 3B with the nil figure. So, in this case, the Delhi High Court case, Arise India Limited, and very recent Supreme Court judgment. So, these Arise India Limited case of Delhi High Court upheld by the Supreme Court. Similar view expressed by the Jharkhand High Court in case of Tarapur Company versus State of Jharkhand, although this is the case pertaining to the VAT Jharkhand. And para 18.3 of the 20th GST Council meeting that clearly mentioned that you first try to recover the tax from the seller only in some exceptional chances for non-traceable of the supplier or its supplier is the insolvent, etc. Then you approach to the recipient. And in case of Madras High Court, D.Y. Bithal, which confirmed the same proposition. Another issue is the SSC incorrectly reported the turnover in GSTR 1, but correctly in GSTR 3B9, whether it is the correct treatment or not. We have seen the various notices in which the assessing officer compare the GSTR 1 figure with GSTR 3B figure or even GSTR 9 figure. Once you file the GSTR 9, it's a final. then error or omission is rectified in GSTR 9 is valid. So in this particular case, Madras High Court, in case of Southern Engineering Service by the Deputy State Tax Officer, writ petition number 6523 of 2024, Madras High Court held that the instant case the petitioner supply was made to SEZ unit, which consequently qualify in the zero rated supply. The petitioner GSTR 3B9 return align with the supply being zero rated. While filing GSTR 1 due to oversight, it was mentioned in the taxable supply. दैट मीन्स कि टेबल 4 में उसने जो है जो 3B की टेबल 4 है और 1 में जो टैक्सेबल आपका टर्नओवर है बाय मिस्टेकली ही हैज शोन इन दैट टेबल. सो ऑनरेबल हाई कोर्ट इन व्यू दैट दिस इज द एप्रोप्रिएट केस टू प्रोवाइड एन अपॉर्चुनिटी टू द petitioner and consequently the imputed assessment order is quashed and remanded back for the reconsideration and for fresh assessment or demand after considering the GSTR 9. Another issue is the whether assessment can be based on the e-way bill, ignoring GSTR 1, 3B and 9. In particular state in the Gujarat, you will receive the various notices from the particular state authorities. What they compare the figure of e-way bill with your outward supply data and raising the demand. So answer given by the Patna High Court in the case of MS Cycle Shop versus State of Bihar, Civil Writ Judiction 4325 of 2023, dated 27th April 2023. They elaborated that the purpose of e-way bill, basically if you see, for the supply of goods or services, you need to prepare the tax invoice under section 31, read with rule 46. That is for the supply of goods or services. And for movement of goods, you have to prepare the e-way bill. So the purpose is different, quite different. You cannot raise a demand merely based on the differences of e-way bill versus your outward supply. So what court basically given a remark in this case, it was held that the e-way bill is only document supporting the transport and the assessment cannot be passed based on it. GST is applicable only when the supply of goods under tax invoice under section 31 read with rule 46 of Act or rules, and e-way bill is the document for movement of goods that cannot be used for the tax demand. So this is the judgment, very, very helpful. Another issue is the whether ITC furnished in the wrong table of the GSTR 9 is amount to denial of ITC. Suppose you, while filing the GSTR 9, you just park your ITC in the wrong column. Answer given in the Orient Traders versus Joint Commissioner of Commercial Tax by the Karnataka High Court. In this particular case, the petitioner appeared to have entered the specific figure in the wrong column, ITC import of goods disclosed in any other ITC. Meaning thereby the figure of import of goods he classify in the disclosed in any other ITC while filing the GSTR 3B. For the month of July 17 to March 18, that is the very first financial year of introduction of GST, the copy of return submitted filed by the petitioner demonstrate evidence and error committed by the petitioner. The pursuit of the same mistake, it apprehended that the ITC which administratively available to the petitioner has been entered under the wrong column. The material on record also disclosed that the said error entirely bona fide and invalid, and that lenient view is required to be taken, particularly since the tax period involved relate to very first year of GST regime. This is the remarks by the High Court. So High Court permitted to make necessary changes in GSTR 3B returns for the month of July 17 to March 18. Another issue is the whether credit note not reduced from the outward supply but claimed in the ITC. So it's a disclosure basically error. What happened? If you issuing the credit note under section 34, you have to reduce from your outward supply. But what happened? The SSC did, instead of reducing outward supply, he claimed that credit note amount in ITC. So whether this is permissible or not, answer given by the High Court. In the case of OS Cybernetic Private Limited versus State Tax Officer, in this case, Madras High Court held in writ petition 9624 of 2024, dated 12 April 2024. In instant case, the credit note of 4 crore was wrongly issued as B2C outward supply and the ITC claimed in ITC register for January 2018. Verification of GSTR1, it is noticed that no such invoices or credit note has been reported in B2B supply in GSTR1. SSC contended that there was a revenue neutral impact as a consequence because instead of reducing from outward supply, you claim in the, or you shown the figure in the ITC column. So Honorable Madras High Court held that the impute order called for interference and set aside as a corollary, the matter is remanded for reconsideration by the respondent. So matter remanded for reconsideration or considering the revenue neutral situation. So these basically issues of GSTR 9. Now we just see the form quickly. Screen is visible, sir? Screen is visible, sir?
Hello. Yes.
Yes, yes,
Yes, sir. It's visible. Plus, yes, sir. It's
This is
visible.
the GSTR 9 form is visible?
No,
No,
sir.
sir. No, sir.
Okay. 1 minute. Now it is visible?
Yes, sir.
Yes. So this is basically we need to understand what is the changes in the form. But what happened now GST, all the clauses should be examined with the section of GST. And whatever column of shown in this form should be at par with the examined in light of the rules, basically. Because nowadays, these forms are taken by the department for issuing the show cause notices or scrutiny return notices. So first we see this year the forms data are auto-populated. If you see the table 4 that is pertaining to outward supply, in this particular year 2024-25, what happened? If you see here the deemed export, this if you having a data of deemed export supply, these data basically reflected in this table. So you have to bifurcate from B2B supply the data for deemed export, extract the data from B2B supply or from the B2B supply for the deemed export supply, because this data is clubbed into the B2B supply. So you have to manually extract this data. And advances, basically advances, only unregistered advances figure that was not registered at the end of March 25 required to be shown only here. So these are the basically observation. You see the left hand side, yellow means mandatory table and brown is the optional table. Another table is the first table is the outward supply with payment of tax. Second is the table 5 is the outward supply made for financial year for the tax is not payable. Coming to I directly jump into the table 6 that's pertain to the ITC table in which the severe changes has made for the financial year 2024-25. If we see the table 6A, this is the auto-populated table, total amount of input tax credit availed through the GSTR 3B, sum of table 4A of form GSTR 2B. This figure is the auto-populated. But this is the combination of what missing in your purchase register for financial year 23-24 taken in 2024-25, missing in GSTR 2B for 23-24 you have availed or taken in 2024-25, missing in PR of 2024-25 taken in 2024-25, same financial year, missing in 2B of 24-25 taken in 2024-25, and missing in PR of 24-25 taken in 2024-26. So these are the missing total combination of these kind of figure. This table they are newly inserted. What happened prior to 2024-25? ITC pertaining to 23-24 is reflected in this column. Now they bifurcate the previous year ITC. So you are in position to know the net ITC for the financial year 24-25. So they insert a 6A1 ITC of preceding financial year availed in the financial year in which included in 6A above other than ITC reclaimed in the rule 37, यानी कि जो 180 days का जो reversal होता है under rule 37, other than, and 37A is the temporary reversal by reason of not fulfilling the condition of section 16 subsection 2, जो हमने 5 condition देखी थी उसको. So in nutshell, ITC missing in purchase register of 23-24 taken in 24-25 3B except 37A or 37-1. So these new table is inserted in this particular year. Another, if we see the table, here they in 6H amount of reclaimed by virtue of rule 37 and for 180 days and 37.8 for temporary reversal, you have to claim in section the column 6H. In this column, basically they removed the other than B above word, changed the instruction and for disclosure, and will nil instead of negative. Earlier it was upon in this difference, the negative figure was disclosed. So instead of negative, here the nil figure will be disclosed because they bifurcate and they insert all the reasons. Reversal ITC claim for 37A. Another, they insert the column 6M, ITC availed through ITC 01, ITC 02, and ITC 02A other than 3B. So what is the ITC 01? If suppose you convert from composition dealer to regular taxpayer, you are eligible to claim the ITC on your closing stock. For availing that ITC, you need to file the ITC 01 return. In case of amalgamation, merger, or reorganization, if suppose any ITC transfer to the transferee company, you need to file the ITC 04 returns and ITC 02A. In the same state, if you required a separate registration for different product, you need to transfer your ITC through the ITC 02A. Earlier, this column is the any other ITC availed but not disclosed. So they make a changes in this form. They bifurcate the all kind of ITC transfer through the various forms. Here in reversal table, they insert the 7A reversal under rule 37A. That is the temporary reversal. 37 is the 180 days. 38 for banking company. 39 for ISD. 42 for exempted supply or taxable supply. And 43 for capital goods for exempted or taxable supply. Another, they make it in table 8A ITC as per 6B above. Table 8B will not consider table 6H value to avoid the duplication. So here only 6B above jo hai, that figure reflected here. If you see the table 8H, IGST availed in financial year on import of goods. This is the original table. They bifurcate H1, IGST credit availed on import of goods in next financial year. Because here the matching from GSTR1 is not required. You are very well, if you see the circular 123, you are very well eligible based on your physical copy of bill of entry for avail the ITC. So here they bifurcate the IGST ITC availed on import of goods in next financial year. And difference is also here clearly mentioned. Here the total IGST availed on the import of goods. So next financial year, subtract for the financial year 24-25 figure is here. Coming to the next table, table 9, here they insert the two new tables here. Already column was tax payable, paid through cash, paid through ITC. Here they insert the total tax paid and difference between tax payable and paid. So these two columns they inserted in this 24-25. In table 10, suppliers tax declared through invoices, debit note or amendment. So they insert the word debit note invoices or amendment, impact of GSTR 1A, because if you very well aware that now onward, if you're supposed to file the GSTR 1, that's data auto-populated in your GSTR 2B. So therefore, any correction you have to make through the GSTR 1A. So in view of GSTR 1A, this amendment is brought. And in 11, again, the word of the credit note was inserted. Language modified, included invoices, debit note, credit note. Table 12, ITC, the financial year reversed in the next financial year. Earlier, the wording was earlier reversal of ITC during the previous financial year. ITC of the financial year availed in next financial year. Earlier, the word is ITC availed for the previous financial year. So these are the changes in GSTR 9. And quickly we see the very minimum changes basically in GSTR 9C. Table 7, they insert the D1 for e-commerce operator, supply on which tax to be paid by the e-commerce operator in 9.5, that is the restaurant services, etc. Then they make the here for these e-commerce operator tax rate bifurcation in table K2 in 9K2. Here they slightly word total amount payable. They delete the paid word, and these are the optional table. And here they insert the e-commerce operator in the part 5. And last, the late fees, table 17 of GST and 9C, they late fees bifurcated IGST, CGST, SGST, payable and paid. So these are the basically changes. So with this, I conclude my presentation. Over to organizer.
Yes, sir. Hello. Yes, sir. Am I audible?
Yes, madam.
Yes, sir. So thank you so much for putting all the efforts and wonderful presentation. I would like Dipesh ji to please go through the question answers, and if any questions is there of the participants, we can take those questions. Yes, sir. Dipesh sir. Hello.
Sir, the question is, I had issued a debit note for purchase return on 12th March 2024 in my books of account. However, the supplier upload the corresponding credit note in their GSTR 1 with 24th August 2024. As a result, this document is reflected in my GSTR 2B for financial year 24-25, even though the transaction actually pertain to financial year 23-24. While filing GSTR 9 for 2023-24, I had already reported the reversal in table 12 of ITC reversed. My question is that for the current financial year 24-25, should I now report this amount in table 61A, because doing so will cause a mismatch between table 6B and table 8A in GSTR 9.
Yes. First, you understand, for purchase return, you are not entitled to issue a debit note. If you refer the section 34, only supplier is eligible to issue the credit note. And if suppose you issue a debit note, you are mandatory required to declare in GSTR 1 and 3B. So coming to your question, you ignore the previous year table 12 and 13 because the data is bilkul reflected in this year from the auto populated in 3B. So you ignore your previous year table 12 and 13. Accordingly, you have to present your ITC in fresh manner. Because what happened, if you compare your figure of previous year 12 and 13, then the anomaly comes. But you ignore the table 12 or 13 of previous year, and accordingly you present the figure. Because you have issued a debit note, so definitely the ITC is net off at your end.
Okay, sir. Over to Deputy Ma'am.
Sorry, I thought it's in mute actually. So if any other questions are there, we can take up. We have next 2 minutes more with Shailesh sir, the expert himself, the author of Taxman book of 8th edition. So congratulations for that.
Thank you, madam.
Maintaining the consistency itself is a big task, and we really appreciate that our profession get the respect because of the dedicated members which we have like you. Thank you for all your work and contribution which you are doing for for the fraternity. So there's one more question. Reverse charge for FY 24-25 paid in 25-26. What to do?
You have to consider this reverse charge in 25-26 basically, because the section is aligned. Whenever you prepare the self invoice under section 31 subsection 3F, you are entitled to claim the ITC on that particular month. So you forget the previous year reverse charge. Whenever you pay, you consider in that year and avail the ITC for the same.
Okay, any other questions? Then please quickly put in, because time is over and we are going to end the session. So thank you so much, sir. Would like to have a feedback from all the participants. Please write in the comment box, because it's very important for the 2 hours of hard work which has been put in by the speakers and all the organization. Your words of appreciation motivate us to bring more such webinars for all of you. Thank you so much. And meanwhile, I request, meanwhile, I request Anil sir, our respected dear past president and a wonderful person, wonderful human being, to please give a formal vote of thanks to all our speakers and our participants. Over to you.
Yes. Friends, I am thankful to Sri Avinash sir for giving excellent discourse on the subject of rights and duties of the taxpayer under the Constitution of India. Avinash sir, you have rightly justified the subject. सर, हम संविधान के कर्जदार हैं और संविधान हमारी पहचान है। आपने अविनाश जी, आपका मार्गदर्शन के लिए हम तहे दिल से धन्यवाद करते हैं आपका। आई एम थैंकफुल टू शैलेंद्र सक्सेना फॉर गिविंग इन डेप्थ स्टडी ऑफ द जीएसटी एनुअल रिटर्न एंड रिकंसिलिएशन। आई एम थैंकफुल टू अवर प्रोग्राम कोऑर्डिनेटर and co-founder of GyaanStation, Dipti-ben Jain. Dipti-ben, you have taken the lead and nicely conducted the meeting. Dipti-ben, we are very much thankful to you. I am also thankful to our parent organization, AGFTC and ITBA, for joining in this webinar. I am thankful to all the participants for making this webinar a great success. Webinar is concluded. Thanks to all.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you so much for being here with us. Wonderful participation we got, and बधाई हो आप सबको वापस से 26 November, the Constitutional Day, and thank you to SG ITBA for conducting this program and giving us the opportunity to be part of it. Here we end our today's session, but this is just the end of today's session. Continue your journey with us for more upcoming webinars. हम लोग ऐसे ही आगे और भी बहुत अच्छे प्रोग्राम्स और टॉपिक्स, स्पीकर्स आपके ऑफिस में, आपके कैबिन में और आपके लैपटॉप में लाते रहेंगे बिना किसी कहीं गए, सेविंग योर टाइम, एनर्जी, and giving the best of the knowledge from this world. Thank you so much. Here we end our today's webinar. Signing off, Dipti Jain from GyaanStation.
Thank you, ma'am.
Bye-bye.
Thank you very much,
Thank you,
Dipti
ma'am.
ma'am.
Thank
Bye-bye.
you.
You did
Puneet
excellent
sir.
job. You did
Dipesh
excellent
sir.
job. You did excellent job.
Thank you, sir. Thank you,
I
Anil ji. Aji.
I am so sorry. I am on traveling, so I couldn't attend the second part. But it was nice to meet you on this virtual meeting. Thank you very much.
Thank you, sir. Thank you.
Mute it.
Yes.
Thank you.
Okay, sir. Here we end our today's session. Thank you.
Thank you.